guys, how are we doing? We are back with another live episode, guys, of the Property Source and Success Show. So what we're going to talk about tonight, guys, on tonight's episode is really how you can benefit. This is both as a property investor, but also as a portfolio builder. I'm aware that we have a lot of people in the community here at Property Source and Made Simple who are maybe doing a hybrid approach. Perhaps you are here as a property investor and you're just looking to source and scale your own property portfolio. A lot of you guys are doing both. So you're scaling your own portfolio, but you're also sourcing portfolio building for other investors. Whatever bucket you fall into, if you haven't yet started your investment journey, everything that we put out here will be super useful. So tonight, I want to talk about how you can benefit as a property investor or as a portfolio builder from the current market deemed shift. So you might have noticed, guys, that there's been a considerable discussion, sometimes a bit of scaremongering in the media, in property groups, at property events, at property networking events, regarding a perceived slowdown in the property market of late. And while that's not, entirely untrue, in my opinion, it's probably, the situation as a whole is probably more multidimensional than it appears. So here's the reality. Desirable areas. Think of your own area right now. The desirable areas, the highly sought after areas, they still remain competitive, particularly where there's new investors making their entrance. Now, sometimes when I say new investors, what I really mean is dipshits and lunatics who have taken a crash course and then they've come out the other end of that crash course as a completely self-proclaimed property tycoon. There are times when new investors can be detrimental to the market. I'll highlight COVID actually as an example of that. Over the period of COVID, when there was a lot of shutdown, supply and demand stopped, a lot of people found themselves taking property courses online. Slowly we eased out of lockdown, and the people who had taken these property courses, first-time novice investors, flooded into the market. House prices through roof, and a lot of those after their 2-year period had ended on their mortgage, or coming up now to their 5-year in some instances, the rent that they had or the rental payments that they get no longer cover their mortgage. So sometimes when I say new investors can be detrimental to the market, I will reference COVID as a clear indicator of that. But what we are witnessing at the moment, guys, is a trend where seasoned landlords, old school landlords, okay, having built a significant equity portfolio in their properties. Some of them are opting to sell amidst what many deem at the moment as show, new tax implications, the shit show that is new tenant legislations and absolutely exposing landlords, and the other shit show that is the hike in stamp duty. So in many cases, I don't blame those old school investors for jumping ship, because let's be very clear, the landscape, investment landscape for many of those landlords, those old school landlords, the landscape that it stands of today, when they first got started, is like comparing apples with Tesla cars. It doesn't make sense anymore. But here's the reality. And this is what's important, because as with any shift in any market, there comes a valuable opportunity for people who have been patiently waiting for the next decent deal to come along. Recent property viewings that I've been seeing, whether it's both on the market or off market, indicate to me that actually we are now firmly entering a buyer's market in certain areas. And if you know anything about investing at all, you will know that a buyer's market is really where you make your money. So what I've really wanted to do for the benefit of the podcast episode today is I've picked out 3 key points that indicate this trend to me and their importance to investors and portfolio builders alike. And I want you to hear that loud and clear, because if you are here and you're listening to the podcast and you are sourcing on behalf of investors and you're portfolio building on behalf of investors, it is your duty, it is your responsibility to have your finger on the pulse with this information. It is your duty, it is your responsibility to have your finger on the pulse with what is happening, what is trending, what is changing. That's why they pay you. That's why they pay you. So the first thing is lower selling prices. Now, many properties are failing to meet the reserve prices due to a lack of aggressive bidding from buyers. I am seeing that at auction firsthand. Now, this trend is really advantageous for portfolio builders, so sourcers, because it allows for the potential to secure significant discounts and add much more built-in profit and equity for your investors from day one. So that makes you as a portfolio builder a very valuable asset to your investor. The second key point that I want to point out is there is an increased time on the market. So investment opportunities, or sorry, should I say investment properties, including those that are at auction, are actually taking longer to sell. And they're often being taken down. I've seen this in my own area as little or as recently as, what day is this? This is Tuesday. And this particular area is in a highly desirable, highly sought after location, but I am seeing properties being marked sale agreed and often coming back on the market within 24 hours, 48 hours. Properties are taking longer to sell and they are being taken down only to be relisted 24, 48 hours later at a reduced asking price. Now, again, for portfolio builders, for you property sourcers, this means more opportunities to negotiate, more opportunities to secure properties that meet specific criteria. Now, the one caveat that I will add to this, and this is really, really important, if you're running a portfolio building business and you don't have a specific dedicated follow-up framework in your business for a 30-day, 60 and 90-day follow-up process with properties that you have lost out on, I'm telling you now categorically firsthand, you're leaving tens of thousands of pounds on the table. So find yourself a system that works, that automates, this is really important, that automates follow-up for you so that you never run the risk of leaving money on the table. Every missed property deal, every missed follow-up that you overlook is a minimum of £3,000. Now, I don't know about you, but £3,000 is a lot of money. And if you consistently step over follow-up opportunities, then that mounts up significantly, sometimes £10,000, £12,000 or more a month. Get yourself a follow-up place, or follow-up system in place. And the third key point that I want to talk about, guys, is there's a higher seller motivation. So many landlords are actually more amenable to negotiations at the moment, and they're pricing their properties in some areas, in some locations, they're pricing their properties more competitively to facilitate the sale. So there is an increased willingness to negotiate, and that can lead to very lucrative deals for anybody who's looking to expand their portfolios. It can also lead to a very lucrative chain of business for a portfolio builder who is switched on. Now, you might ask, well, okay, Danielle, what is it exactly that's driving this slow but sure shift in the market in some areas? Well, I've highlighted 4 key areas that seems to be the case, or 4 driving factors amongst this. The first one being high mortgage costs. Buy-to-let mortgage rates are hovering around 5.96%. In some cases, in some landlords, some lenders are putting 7%. I mean, if you're based here in Northern Ireland, and many of you will be, we are living in the Stone Ages. We've got 2 lenders, and one of them, their fee is 7% or higher in terms of interest rates. So landlords who maybe secured fixed rates of 2% are now struggling to refinance. Think back to the madness that came out of COVID in 2020. We had every Tom, Dick and Harry take an online course and then came into the market as the next Warren Buffett, and then they waited out there making scandalously high offers on properties. I spoke about this literally minutes ago. Well, guess what? They're about to get their asses handed to them on a plate because their 5-year deals are coming to an end this year. Okay, so this situation increases their urgency to sell, and that in turn creates opportunities for people who are smart, who are savvy, like you and I. Really important. The next driving factor in relation to the market shift is, let's face it, it's the upcoming changes to the rental reform. Now, personally, it's just me, but I feel these changes are a little bit like making a mountain out of a molehill. The reality is, many landlords are concerned about their implications, particularly in light of what was deemed already low rental returns. These landlords tend to be older school by nature and are frankly off at the inconvenience, which again presents opportunity for people like you and I. The next driving factor, in my opinion, is the mortgages are on a cliff edge, right? The last of the low fixed rate mortgages expire 2026, 2027. More landlords are likely to offload properties in order to avoid unmanageable repayment situations. So high interest rates, guys, have significantly eroded profit margins, making in some areas buy to let less attractive for those who don't know how to get to the front of the queue and secure a good deal. But that's not the same for people like you and I, because if you've been following my content for any length of time, you will know that there's a very clear framework to getting yourself at the front of the queue with estate agents, with letting agents, to access lucrative off-market deals. And if you don't know that, where the have you been? And the last driving factor, guys, is down valuation. So, and this is rife in the market at the moment, there is a lot of caution amongst surveyors, which has led to, lower property valuations, and buyers might actually need to cover the shortfall in the financing, which can tie up capital in properties or even hinder reinvestment opportunities moving forward. But those that can navigate those challenges creatively, or those who have larger pots of capital to work with, can still find property success in this market. It is a period of transition. There's absolutely no doubt about it. But with that uncertainty comes a substantial potential for investors who can effectively negotiate with motivated sellers, and who can deploy cash quickly. So if that's you as an investor, this is your year. If you are a portfolio builder, find, work, attract investors who can deploy cash quickly, who are not hell-bent on 25% below market value. But the irony is, with these driving factors in the market, with the interest rate changes, with the mortgage rates coming to an end, with the new legislation, with the drive to offload for old school landlords, you will likely find that you can negotiate a really healthy discount on some property deals, but it's not necessary. But acquiring properties, guys, at the right price and implementing the right rental strategies, this year you can establish a really solid medium to long-term investment. It is also worth noting, I find this to be true, it is also worth noting that now could actually be a really good time to set your sights on properties in maybe more affluent or more highly sought after areas that were once maybe totally out of reach due to price range. You might find that the market shift could make those types of property deals slightly more accessible. And what am I doing in this current perceived market shift? Well, the reality is, I'm continuing to buy. I make absolutely no bones about the fact that the large majority of my asset base is made up of buy-to-let properties. We completed on a buy-to-let property on Friday of last week. We will complete on another buy-to-let property likely within the next 2 to 3 weeks, and I'm actively on the search for the next one. My goal this year is to add 12 buy-to-let properties to our portfolio. We are 2 down with a 3rd coming, so I think we will do it. There is opportunity. Now, if you are portfolio building on behalf of investors, what I would encourage you to do, guys, is to take today's podcast, listen to it, make notes, but blend the points that I have spoken about on the podcast and blend it into your marketing, blend it into your conversations with potential investors, showcasing to them that waiting till the time is right is actually never a good idea. You need to be able to demonstrate to them that you have got your finger on the pulse with the market, that you have got your finger on the pulse with the trends, and that you can spot where the opportunity is coming from. So that's us. I hope this has been helpful, guys. What I ask is, if you find the Property Sourcing Success Show podcast in any way useful, in any way helpful, let me know in the comments below. Refer a friend. It's over on Spotify. Tell people I am slowly but surely trying to change the landscape of property sourcing for the better, with actionable, real-world advice in terms of what works from a non-paid perspective. So I'll see you all again next week. Bye.